G'day taxpayers, sovereign wealth funds. It's always interesting to see the commentary that pops up, a little too frequently for my liking anyway, that Australia doesn't have a substantial sovereign wealth fund. Okay, we've got the future fund, but it's actually relatively small compared to the size of the Australian economy. And people often cite Norway as having a huge sovereign wealth fund that's been built up from the assets of the energy taxes and charges and royalties and the like, and of course some of those in the Gulf states too, which again are built on the revenue of oil predominantly. Now in Australia, I think this overlooks the fact that we have in effect 17 million sovereign wealth funds. They're the superannuation accounts that Australians have, that they're contributing their savings to, and they're currently around about 4.3 trillion. That was at the end of June. Obviously markets have rallied since then, so probably 4.5 trillion dollars now, which is something close to 150% of Australian GDP, and growing very, very rapidly, growing at a pace faster than the rate of GDP growth. So they're going to get bigger and better than ever. So how do these compare with a sovereign wealth fund? Well, the sovereign wealth fund is a single entity that the government controls, that allocates revenue from royalties, as in the case of energy, in the case of Norway, into the fund, and fund managers manage that money. They buy shares, they buy property, they invest their money internationally and get a return. How does superannuation work? Well, we pay 12% of our incomes into our superannuation accounts, and fund managers invest that money into stocks and property and bonds and internationally as well, and we get a return from that. So in terms of the sovereign wealth funds, without compulsory superannuation in Australia, clearly the amount of money in pension funds would be materially, massively lower and would be trivial. And we probably still wouldn't have a sovereign wealth fund to boot. So in a sense, the equivalent of those sovereign wealth funds internationally is our superannuation industry, which continues to grow, prosper, and build the retirement savings for many, many more Australians. So there's less and less of demand on the public pension in the years ahead. And just by the way, with the markets having done so well, I implore everybody to do a couple of things. One, make sure that they've got their fund well managed, and that is ensuring that their employees are contributing, because there is such a thing as superannuation theft, that employees don't pay their money into your super fund. So just check that. The other one is to have a look at the balance. Assuming everything's all fine and dandy, do you really think that you would have saved that amount of money were it not for compulsory superannuation? And be honest about it, I dare say most people wouldn't. So in a sense, that's how the Australian savings boom, the fact that we've got an incredible inflow of funds from our investments overseas, because the Australian economy can only absorb so much of that local investment. And as I've said on occasions before, our sovereign wealth fund are our superannuation accounts, and that is a marvellous thing. And it sort of just puts back into the box those people who think that, I wish we'd had a sovereign wealth fund. Well, if we'd had a sovereign wealth fund, we might not have the superannuation industry that we've got today. Anyway, my rant for the day.